Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, October 29th, 2020. Quite a bit to cover in this video, but we'll keep it relatively limited. We're going to start out with the broad markets. I'm going to talk a little bit more about that. I've been hyper-focused on the Qs lately, meaning the Nasdaq 100 or QQQ, the tracking ETF. So we'll go over that, and also what's in store, for tonight. We have 3 of the 5 big, what I call FAANG stocks, FAAMG. Those are the top 5 components of the Nasdaq 100, have a tremendous impact on that index, as well as the S&P 500. And we have Apple, Amazon, and Facebook all reporting tonight. So it's most likely going to move the markets one way or another, most likely cause a gap up. We'll see what happens tonight. So keep that in mind with whatever you take home tonight, even if it's not the Nasdaq 100 or QQQ. Those 3 alone, especially if they all go the same way, let's say earnings beat, a surprise. And I'll also say this, it doesn't matter about earnings. I've seen stocks blow earnings out of the of water, only to be sold off. Sometimes you get an initial rally, sometimes nothing. It's all about the expectations and what they give forward guidance going forward. So don't put too much into the initial reaction. If you're watching things trade in the after hour session, QQQ, the Nasdaq 100 futures, Apple, Amazon, Facebook, it's the initial reaction is quite often a knee-jerk reaction, especially after the earnings report, because it happens like this. They report earnings, give you the numbers, then they follow up with a conference call, which will typically, some companies have refrained from forward guidance due to COVID. It's been a while now. I don't know if they're still doing that. And that can change things as well. So usually it's not until at least the next day until the dust settles and you get a good idea as to which direction the stock may be headed from there. Okay, before I get into the charts of QQQ, let me talk about how you find that. Somebody in the trading room pointed out those big 3 earnings, and I should have mentioned and probably would have brought up anyways, but keep in mind there's a ton of resources here on the site under, of course, the resources tab. You have stuff for your account, frequently asked questions, tools of the trade. This is a section I use almost every day, especially during the earnings season. You can see down here we have an economic calendar, an earnings calendar, position size calculator. So if you click on earnings calendar, it's going to take you to earningswhispers.com, one of my favorite sites. What it will do is list, when you take that link, you're coming into today's earnings, and it's going to show you if this box, if you go in the morning, it's going to be on BMO. That means before the market opens. AMC means companies that are reporting after the market closes. And what's nice is it'll rank them by importance, how big of a market mover. Oh, and I left out, I'm sorry, I said these 3. There's Alphabet as well. For some reason, they put ATVI and Twitter and well, at least these 2. There's the 2 share classes ahead of that. No, Alphabet's a bigger market mover. So you have almost all the FAANGs reporting tonight, 4 out of the 5. And again, so that gives you a heads up. And during earnings season, you want to check on this list. And if you have a stock you're trading, let's say you're trading OPK, then you hit OPK. It's going to tell you when OPK is reporting, and any other one you're looking at. Okay, so back to the charts. I've made my, where I think things are going, what I'm doing, abundantly clear since yesterday, and I wanted to talk on that today because I had a good question brought up in the trading room. 2 questions. One question was, or it was more of a comment, how Apple and a couple other those big FAANGs tanked and broke some support levels right before the close. Well, I wanted to address that. My reply to that is I put less than 0. Factor in virtually nothing into what happens right before the close, especially on a big day. Remember, yesterday we were down over 3%. That's a big day. All ETFs have to square away their positions. Remember, an ETF it's similar to a mutual fund. They're holding many different stocks. QQQ is holding the 100 companies in the Nasdaq 100, and they need to square off. They need to square off their current trading price with the stocks they're holding in the right percentages. So every day at the end of the day, and mutual funds have to do the same thing. By 4 p.m., boom, that's where they get their net asset value for the day. The only main difference between a mutual fund and an ETF is an ETF tick by tick throughout the day is pricing in the value of all those securities. It's not 100% accurate, but that's what they're trying to do towards the close. Whereas mutual funds, the price only changes at the end of the day. So if you sell your mutual fund at, let's say, 8 in the morning, you wake up early, or 2 o'clock in the afternoon, midday, none of that matters. That order goes in at the end of the day after they see what the mutual fund was worth at 4 p.m. They price all the securities in there and come up with the NAV, or net asset value, and that's the price that anybody sold up until 4 p.m. will get later that day or the next day when it's processed. Okay, so why was I talking about all that? Well, this is normal. At the last minute, especially on a volatile day, you're going to see a move. It can go either way. It's just squaring off on these ETFs and funds and all that. So it means absolutely nothing to me. Same thing I said on breakouts. I'd never take a breakout that occurs, especially in the last few minutes of trading. I try to avoid breakouts that occur in the last half hour or even last hour of the day. And I'll wait to see what happens the next day. But again, this, and even if it did this, would not have been technically significant because that was a late session drop there. I just want to point that out. So when we go back to the chart, oh, and you can see, coming back to that, that was a 1 minute chart right here. Here's that big 273.82 level I've been harping on in the 60-minute chart of QQQ. And you can see, as I talked about yesterday, this was yesterday's trading right here. We traded on it all day, on and through it, around it. And again, on a 300-point security, you know, we didn't even drop, maybe even with that, 1% or so above it or below it. So we traded on it. And then yesterday's video I mentioned there was a trade all day yesterday. This was the top of the trading range. We kept bouncing, and I said a break above that would most likely, you know, trigger some buying. I said it may happen towards the end of the trading session yesterday, could happen in the futures overnight, or it could happen today, and that's what happened. After the open, boom, we broke it, back tested, back tested, back tested. Once they saw it held, they rallied it, came back, tested it again, and it rallied again. Okay, so that's near-term stuff. That's near-term bullish. That when I put the post out this morning, we hadn't even done that yet, but that reaffirms what I, was expecting. A bounce so far. That is, by all accounts, a successful defense of that 273.82-ish level. Again, that comes from the 60-minute chart. That's right here. That was my downside target on this pullback, and you can see we had that to that late day drop. We had a brief and slight, overshoot of that level as well as the bottom of the channel, but we've since recovered it. And that's perfectly normal. Sometimes you'll overshoot a price channel, top or bottom, relatively briefly if you snap back into it. Okay, so now where do we go from here? I'm only looking near term. I have my short-term glasses on right now, or short-term goggles, whatever you want to call them. There's the midpoint of the channel. So far, that's checked today's rally. That may stop it. I'm still looking for a push up to just shy of yesterday's gap, so right around 278. The high yesterday was 278.64. The top of that candle is right around 278, and that's where I'd like to close out my longs if and when I get there today. Whether we get there or not, I probably close everything out because I don't want to roll the dice and see what Apple, Facebook, and Amazon do. But we are going to look at those three. The reason we're going to look at the charts, as I often say, if a stock is clearly bullish or bearish heading into earnings, that often dictates the way it's going to go after earnings, regardless of what they report. So we'll look at those three here in a second. Okay, and just to recap, kind of, my preferred target is up there. But I'm going to get to NQ in a second. We also hit, and we're hitting it right now again, that comparable or my minimum bounce target on NQ, the future. So again, this could cap today's rally. I'm going to get to NQ in a second, but I'm leaning towards a little more upside. I think this Qs are going to prevail over NQ on this. And, if we continue higher, it's certainly possible. There's a lot of stimulus talk. Let me just loop back to one other question. Somebody asked earlier today, around the open in the trading room, Randy, would you short QQQ if we take out the recent lows and take out this level? My answer was no. I said we could most certainly go down there, but I won't short it for a couple reasons. Number one was the extreme oversold readings. We haven't been this oversold since all the way back here. It's been a while since we've seen such oversold readings, especially on NQ. The other thing is, look, the elections are coming up. Biden's priced in at this point as a winner. There's undoubtedly, big stimulus package coming, and the markets. I really just don't think the market's going to tank. I did expect some selling before the elections. I've mentioned that before, and we're getting a little profit taking. But barring anything big, and look, they're already shrugging off yesterday's news and the spike of the coronavirus cases. Like I said, I don't know. I mean, you can call it new news, and I know there's some shutdowns and partial shutdowns in France and Germany. I saw that in the headlines, but again, people get corona fatigue, and the world's going to go on. And again, this is the U.S. here. This is a Nasdaq 100, primarily with U.S. companies, and so that's what's going on. In other words, I said I'd rather miss out on that drop than to short such oversold levels. Let's flip over to NQ and I'll show you that a little bit better there. Here's NQ, Nasdaq 100 futures. I'm going to go back a little bit here and go back about this far because I need to go that far. This is an extreme. I already have an extreme. This is my oversold reading for Nasdaq 100 futures, not the chart program's default. Most charting programs are going to give you oversold line at 30 and overbought at 80. You can see I don't go off the norms. If a security hits 80 and keeps going and usually stops here, in this case almost 87, that to me is where it's oversold. That's where I look to short. I mentioned that here at the time, expecting a pullback. There was our rising wedge divergence, and that was this pullback. So those are the things that I look for to take profits, even if it's just near term, like that little pullback. Likewise, you want to see these extreme oversold readings. Usually just a hit of that level is good enough for a bounce. It always has been in the past, tradable bounce. But this extreme, the last time we had it was right here. So as I said this morning, something to note, that extreme overbought reading came early on in this big correction with a lot more to come. Now there was a big bounce to be made. If you're an active trader, that was probably 4 or 5%. I don't know, I'd have to measure it out, but just eyeballing it, I'm sure it was at least that much. So something you didn't want to ride out if short, and certainly something that you would have loved to ride long. So you need to respect these extreme oversold readings. At the very least, oversold is not a buy signal. It's not a guarantee you're going to bounce, but it puts the odds against you to short here. So that, to be clear, that's why I wouldn't short if those lows got taken out. I'd rather let it run its course, miss that trade, and then get in when I see a more objective entry. It's not objective for me to short when we reach such extreme oversold readings as we did here. Okay, so that's that. And as I said this morning, futures didn't do much last night, and we opened the day right here, right about where we closed yesterday, right at the bottom of that support zone I have on NQ at 166, 167. So nothing changed there. Okay, now as far as bounce targets, I just showed you QQQ. We're a little shy of that bounce target, but on NQ, I gave you a target of about 11,350. Now, if I look real closely on that previous reaction low, I could have the line a hair lower, and that's about what we hit when we stopped today. But again, if you put a midpoint line, there's maybe a little bit more room to go. Well, no, that's actually checked on around the midpoint line as well. So, and so far we've had a couple reactions there. But I think we're going to get a little more upside, like I said, towards that level on QQQ. It's a good time if you did take a long yesterday or this morning, both of being objective levels, to tighten up stops, maybe somewhere in here. You want to protect profits. You don't want to go negative now if we take a dump down, if that's all we're going to have. Maybe just let it run from here. And again, up to you. If you're bullish, you think Apple, Amazon, and Facebook and Alphabet are going to blow it away and the market's going to rally, and that's certainly a possibility. Those guys are earnings juggernauts. We all know that. Then let it run, and your next logical target would be the top of the price channel. As I've gone over before, it's simple stuff, very simple stuff when you recognize a price channel. Long at the bottom, close your longs at the top and go short, and go to the bottom, cover your shorts, go long again. Up, down, up, down, up, down. A little overshoot there, but we're back in the channel. And if you think the overshoot was bearish, I view it as bullish because we overshot it, but we recovered the channel. So that is, if nothing else, there's a bear trap for you if people are only looking at the channel. Now I was putting a lot more stock on the horizontal price supports on QQQ and NQ. But again, that may have sucked in some shorts, which are now being squeezed out and forced to cover, which puts buying pressure on the NQs. Okay, let's talk FAANGs. Let's go with the biggest one first, Apple. Apple has on the 60-minute chart, so near term, a constructive, i.e. bullish looking chart. Now it's in a downtrend, so it's not in a bullish trend, but the chart is constructive and it's a potential bullish setup. Why? Because we continue, I pointed out divergences here. We made a slightly lower low. Again, that was that late day sell-off. So that was that reference I made. I put absolutely less than zero. If I put zero emphasis on that breakdown, that means I'm just disregarding it. Less than zero means it actually goes the other way. I view that as bullish, because if people thought that was a breakdown and shorted Apple in the last few minutes of the trading day on that, order imbalance to square off the positions, guess what? They got smoked today. They realized, if you're using technical analysis and you're looking at the same levels I am, oh, we broke 112.33, there's a short entry. Wrong. We got smoked, or they got smoked today on a big green candle, and Apple's been moving up steadily. So those that took the short from where that candle, the bottom of the candle, Apple's already recovered about 3.74%, or rallied 3.74%. So there it is. Positive divergence. All other things being equal. And again, earnings can make it go either way. That is a bullish chart, so that indicates more upside on Apple if these divergences play out. What would change that? Well, a solid break below that 112.33 level, solid 60-minute close, not again the 4 p.m. candle. That's support. And if the divergences get burned out, which will happen if we go much lower, these divergences aren't very strong. There's not a big upward sloping line. The lines are upward or almost flat on the PPO there, but against a declining line in prices. But again, much lower, you lose the divergences, and therefore you lose the potential bullish setup here in Apple. As of now, that's what I'm looking at, is Apple near term, based on this, could rally after earnings. So we'll see. Again, not something I want to bet on. So, I'm just going to lighten up today, take some profits, as an active trader, and then wait and see what happens after earnings. This is the daily chart of Apple. I don't have a very strong opinion on it. It's flirting around the 50-day EMA, and I'm just going to say, I don't have a big opinion on this one, but I will point out the PPO has been weak. It tested the zero line from above. That's keeping this trend. It's a trend indicator. That white line, when it crosses this dotted line right here, or the dash line, the trend's bullish. You want to be long, like you were this whole time here. Bearish right there. Told you bearish trend. Told you we've been in a bullish trend all this time. We hit the level. Usually you bounce, but we're already testing it again. So again, where Apple goes in the near term can also change this intermediate to longer term chart here. We could flip this trend indicator to bearish right there. Another level to watch I like to look at on a lot of securities, not all of them, the 50 level, or the zero line on the RSI. That's your midpoint line. Remember, RSI typically 30 is oversold, 70 is overbought. I have different levels here. You can see on Apple about 80, takes about 81 on Apple to become overbought. But the zero line on so many securities, I notice, acts as support when you're above it. The trend's bullish, and it acts as support on pullbacks, keeping the bullish trend intact. Once it crosses below the zero line, that is a bearish trend, and just as the zero line acts as support when tested from above, it acts as resistance when tested from below. Once you broke above right here, buy signal, at least on that one indicator. Bullish test, successful back test, successful back test. Oops, broke it there, and we've been in this downtrend. We had a little whipsaw above it, but we're back below it again testing. So it's something to note there. And again, so it tells me on this daily chart, much more downside on Apple is going to start to firm up. Bearish case, we'll lose the 50-day EMA. PPO is going to cross below the zero line. RSI will get rejected off the zero line there. Gosh, yeah, I got to go back. What did I call it? The zero line. It's a 50 line. My bad, guys. The 50 line in the RSI. Remember, 30 is oversold, 70 is overbought. In the middle there, you have the 50 level. That's the white dotted line, not the zero line. Zero line on the PPO. Next up, Amazon. Trend indicator has been a little whippy. Daily charts not telling me a lot. We broke down there recently. I don't have a very strong read on the daily chart. Weekly chart, we broke this trend line. We're below it. When I look at a lot of these stocks, and I always say this, divergence, whether it's bullish divergence at a low or bearish divergence or negative divergence at a high is not a must, but it really helps to forecast the big trend changes, the big corrections, even in an ongoing bull market. 36% drop after that divergent high, 14% drop after that divergent high. And so, just based on the posture of these, this would mesh with a scenario of one more thrust up in Amazon to make a new high, but a marginal new high, put in a divergent on the weekly, and then comes the major, much bigger correction, a lasting trend change, tradable trend to the downside. So I'm not going to say I'm bullish on Amazon near term. I'm really pretty much neutral. Same with Apple. Apple, by the way, I think did I go to the weekly on Apple? No, I didn't. But it's same thing there. You can see if Apple happens to make an equal or marginal new high anytime soon, you're going to have divergence. You already have some RSI divergence, but you don't have it here on the PPO yet. And you would, should we get a rally, let's say pre and post-election rally, big stimulus plan announced, market rallies, boom, that's where I'd be looking to maybe, I'd be on the lookout then for a sell signal to maybe position short on Apple. And keep in mind, if Apple and Amazon drops, the market drops. No two ways about it. The market is not going up without those two stocks. Excuse me. Alphabet here on the weekly chart. Long-term trend line that's been broken here. Back tested once, twice, 3 times. Minor trend line there. Divergence has been building. We already have negative divergence. We had it at the previous high. That doesn't mean we wouldn't have it again. We would have it again if we get a marginal new high. So that also meshes with that. But we put in that divergence. So maybe that's it for Alphabet. Maybe not. We'll probably have a better clue in the next week or so, after they report. Daily chart. Let's see. There's, I'll turn off all these lines. There's a potential, I pointed out before, it's not the best pattern, but a potential head and shoulders topping pattern. This right shoulder's getting a bit stretched. It hasn't taken out the head yet, but as far as symmetry goes, it's not perfectly symmetrical, nor do they have to be. But again, we need to turn down, and we already have off that right shoulder, but we need to, if Alphabet misses and has a big down, what you want to look for is see if that head and shoulders comes into play. There's your neckline, a downward sloping neckline. If you get an impulsive move down to there on increasing volume, that would help to confirm that or validate the pattern. That's what you want to see on a head and shoulders pattern. So again, only a potential setup. 60-minute chart on Alphabet. We had this divergent high recently, a little wedge pattern there, negative divergence, impulsive move down, bear flag, followed by an impulsive leg down. So the bear flag played out, and as I mentioned the other day, played out to its projected measured target. We hit support, and logically, and again, the case was made the other day. I was making the case for the bouncing QQQ that we're seeing right now, is that a lot of these stocks, including Apple, Alphabet, everything I just showed you on the 60-minute time frame, hit support. So there's your bounce. We're already at the bottom of the gap. And if we can go a little higher, well, there it is. There's your gap resistance. There's price resistance. Top of the gap is up here. Bottom of the gap is right there. So again, we're starting to get to those minimum bounce targets. If this is just a reflexive bounce off support, it's probably going to stop anywhere from here to here. Again, near-term stuff on the 60-minute chart. And then finally, Facebook. Facebook, again, case was made for the bounce in the Qs that we're having now. And Facebook, when it pulled back to this trend line. Boom, 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 boom. Nice, lot of reactions there. We had the divergent high, negative divergence. It's 60-minute chart, so it's only forecasting a relatively, short-term drop. And that's what we got. Breakdown, back test, drop, hit support, bounce. It's right now at the top of the gap right there. So it's a gap resistance, reporting tonight. So that's probably it for the day in Facebook. And again, probably a good time for active traders to either tighten up stops or, get ready to book profits if you went long on this bounce. Couple questions in the trading, or at least comments on gold. I covered gold pretty much in detail the other day in my last update. And if you missed that, and I understand some people don't catch every post, every video, especially the videos. Some run a little longer than others. Click this, type in GLD or $gold, and it'll show all analysis in chronological order on gold. So if you want my last updates on gold, you go there. You can also, on any of these homepage posts, if you see the any of these ticker tags are hyperlinks. See how it changes color? So I click on GLD, it's going to load all those. And you can click here, and you'll just have to skip to the part in the video where I cover it. Here's what I said on gold. Near term, I have no idea. The charts aren't that clear, but I have high degree of confidence. I laid out the long-term charts, what I'm looking for. The same thing that months back I predicted the rally in gold would stop and we'd get a correction, and that was gold hitting major long-term resistance, the euro US dollar pair running into a major long-term downtrend line, and those two coupled together. And so pretty much I said, we need to see the euro US dollar break out above that downtrend line. It's been consolidating, and that could happen any day now, or it could happen months from now. Gold can consolidate. So again, you're not seeing a lot of updates in gold because in the near term, I don't have a good read on the charts. I've said for months now, weeks, they've been sloppy, trading in sloppy ranges. The trend has been mostly lower, but moving through support lines, trend lines, support levels. And I love trading gold and gold mining stocks, but I like to be selective. And when the charts just aren't conducive to trading, at least not my style, I don't spend a lot of time covering those because it takes away from other things I want to highlight, and I don't trade them. So I wanted to just kind of do that because I know there's always questions in gold and the gold mining stocks. And right now, like I said, near term, your guess is as good as mine. Longer term, I do have some strong, views on when the next big buy signal will come for gold. All right, let's go back to let's talk on natural gas. Somebody asked about nat gas. Update there. Here's the natural gas 60-minute chart. Again, UNG is probably the best ETN to trade with the least decay. There's other ones out there that are leveraged, but UNG isn't leveraged. And natural gas is so darn volatile, you really don't need the leverage. I mean, this sucker can move. Natural gas can easily, I've seen it many times, go up or down more than 10% in a single day. So you add 2-3 times leverage to that, and you get caught on the wrong side of the trade, you're going to lose money fast. All right, so what we have here is an ascending triangle pattern. You have resistance right here at this line. You probably want to know where that level is. It's right around 335 or so, 333.5, and you can see that's capped all the recent advances. Boom, 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 boom. Here's our uptrend line. I've stated for a while now. Pullbacks to the uptrend line provide objective long entries or re-entries, as does the pullback to this 3195 former target. That target was hit here, broken out, and that's it. So this is it. We're boxed in this little range. We have dual support levels below. Bearish if taken out. You don't want to, I certainly say stops or objectives somewhere below there. You got to give a little room because natural gas is whippy, and a breakout above the range, which I'm leaning towards, takes us up to my next target for 3.436 give or take, and then you can see the other targets here, longer term targets. UNG, I've covered this. These are potential targets as well on here, but you're best to correlate, even if you don't like, or you can't trade futures or don't want to trade them, you're best to correlate the price targets. Keep an eye on natural gas, even if you don't have a futures account. Investing.com will give you free charts, real-time charts, streaming charts on natural gas. If you create an account, no charge for it. You can then save those charts and keep them open on your monitor anytime. Coffee continues to have a nice potential bullish setup, but just no ump. It just doesn't have that spark it needs. We pretty much made an equal low today. We're pushing that lows. You might not want to give it much more room if you're in it. That's it. We're holding here. We're not going much lower. Again, we're about equal low. The divergence continues to build. Bearish, bullish case can certainly be made, but we could continue to limp our way down all the way here. That's big support. These previous lows back from June, if we get there. So if you want to keep stops tight, not give it much more room, then you can always re-enter should coffee turn around and reverse. Right now, I don't have a clean downtrend line anymore. We had one there, broke out, and we're back testing it. So coffee really, once again, it's just doing the same thing. It's just clinging on by a hair to that bullish, potential setup. If it can reverse here, great. If it can break 108.60, great. And these are still the potential targets. If it goes much lower, like I said, The divergences will be intact for a while, and they might even be intact all the way if we get down here. We'll see. We'll just have to watch that one. JO, of course, is the ETF. And JO, although I put a higher weighting on what the futures are doing, JO has briefly dipped below this trend line but regained it today. There's an uptrend line right there. So see JO also hanging on by a thread, still keeping the divergences intact, so I can still make a case for a rally. Somebody needs to throw a match on this. It's a pile of tinder. It's ready to be ignited and go, but it just needs that spark, that catalyst, and that's some buyers to step in here and start running it up and take out these levels. Okay, that's it. I'll wrap it up here. We're at that midpoint line. It's not super well defined, but again, that's stopped everything. And remember, that's also resistance on NQ. So I think we can pop the highs. When you look at a 1-minute chart, we're kind of pushing up there today. We already had that. We got checked off that level once, but we're back at it again. So I think if we can pop this level right here, about, what is that? Roughly 276.50, that should run us up closer to a run at that gap. Like I said, I think a lot of eyes are going to be on that gap. So if you're like me, here's the gap. And you don't want to gamble and see what happens with those big four fangs as they report tonight. Instead of trying to target the entire gap, the bottom of the gap, you might want to take profits a little earlier if you get it. All right. And again, if you're bullish, hold on, ride it out. Swing traders have to make that decision. They can't be concerned with all the little minor zigs and zags. I'm just wearing the active trader mode hat right now for reasons that I said before. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.